Hello and welcome to the Savera. This is Tinkle before you. While June 4 was one of the most awaited days, it has proven to be a nightmare for the share market investors as Indian stocks indices witnessed a bloodbath on the day the Lok Sabha results are being announced, where incumbent Bharatiya Janata Party performed below par and seems it may fall short of exit poll predictions and the majority mark on its own. The BJP-led National Democratic Alliance is leading in nearly 300 seats, while the India Alliance is leading in 229 seats as per the data from the Election Commission of India. The idea of a coalition government led by the Bharatiya Janata Party at the centre has led to widespread market anxiety and a sharp decline in the stock indices. The BJP, which has been a dominant force in the Indian politics for the past decade, is seen as a pro-industry party whose policies have generally favored economic growth and market stability. The failure to secure a clear majority to the Bharatiya Janata Party of its own raises concerns about the formation of a stable government and the continuation of economic growth. Today, while closing bells, Sensex closed at 72,079 points, down by over 4,000 points or 5.74%, while Nifty closed at 21,884 points, down by 1,300 points or 5.93%. All Nifty electoral barring Nifty MCCs and are deep red today. Nifty Metal, Nifty Financial Services, Nifty PSU Bank, Nifty Private Banks, Nifty Realty and Nifty all slumped the most. The NSE data showed the steep fall is due to the results so far falling short of the exit polls, which the market had discontinued yesterday. If the BJP doesn't get a majority of its own, there will be disappointment and it is getting reflected in the market. Also, it is possible that Modi 3.0 may not be as reform-oriented as the market expected and may return more welfare-oriented, said the VK Vijay Kumar, Chief Investment Strategist of Geojit Financial Services. At one point during the afternoon, Indian equity indices plummeted over 8% on Tuesday as the poll trends indicated a closer than anticipated fight for the incumbent Narendra Modi-led NDA government. Sensex logged its worst session in over 4 years it witnessed back during the COVID days. Markets rallied 3 to 3.5% on the expectation of Modi-led NDA win on Monday. PSU, especially banks, led the rally. Today, polls were not in the line with the exit poll outcome. Markets move more than 4 to 5% down, said the Jai Krishna Gandhi, head of Business Development Institutional Equities, MK Global Financial Services. He also further said that we expect 7 to 10% of downside for broader markets from the current level. We recommend positioning to move from the alpha stocks to the defensive at FMCG, IT, Pharma was short on ABB, Siemens, Cummins, Coal India, NTPC, PFC, REC, PNB, Canara Bank, Gandhi suggested. The rupee closed weaker against the US dollar also on Tuesday, depreciating by 38 paise to close at 83 rupees and 53 paisa. It closed at 83.15 on Monday. The rupee had been largely steady for the past year, largely due to the RBI's intervention. This uncertainty triggered a panic sell-off across various asset classes, impacting economic growth. The dollar-rupee exchange rate may continue to rise, potentially reaching 83.90 paisa, with 83.40 serving as the immediate support level, said Jatin Trivedi, VP Research Analyst of Commodity and Currency, LKP Securities. Manish Chaudhary, head of the research of Stocksbox, asserted that markets have reacted sharply to the initial trends of the NDA, leading on around 290 seats, way less than as projected by the exit polls. With the NDA still looking to form a government with the important support of the coalition partners, markets today look jittery about the prospects of the strong decision-making. Markets believe that the reformistic approach, which was a hallmark of the previous two terms, might take a backseat in the third term. However, the sense is that it is still early to jump to the conclusions and should idly wait for a clearer picture, said Chaudhary. Shrikant Chauhan, head of the equity research Kotak Securities, noted that the extremely volatile and uncertain, hence it is advisable that traders should remain cautious for the next few trading sessions. On Monday, Indian benchmark indices closed at a record high driven by the fresh buying from the investors after the exit polls indicated a comfortable majority for the NDA government. The Nifty 50 index gained 733 points, closing at 23,263, while the BSE Sensex surged to 2,507.47 points to close at 76,468 points. Well, the time coming ahead will tell how the markets react after the country decides who will be the next Prime Minister. Well, for now, that's all. And for more major updates, stay tuned to the Savera.